right, very good. Very good. Greg sends his apologies. He doesn't, I'm not sure what he did to fix it, but we are starting a few minutes late, and I apologize for that. I do want to say thanks for hanging around and staying in there while we kind of got everything working. You guys are awesome. So speaking of awesome, I'm going to read this thing out loud. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. And as part of that, I also want to say with Market Recap, we end up looking at a lot of stocks. We look at the markets. We look at the markets in general. We'll look at stocks that you're interested in. At no point are we going to be making decisions for you on whether you should be buying an instrument. What we're going to be talking about is purely like what we think of stocks, and trading is risky. So keep that in mind. We're not making a recommendation that you should buy something. You know your situation better than we do, and I think that covers the legal stuff. So I'm going to move on. So in any case, today's guest is Steve Bigalow. Hey, Steve, how you doing? Steve,
very good.
Steve, I often talk about as you as being one of. Oh, now I can hear me coming back. Where is? Hold on a second. I'm getting a little bit of audio feedback again from me. Can you hear that, Steve? Okay. All right, no problem. I'm going to do that.
Muted.
Okay. All right. Great. Steve and I have been partners for a while. Steve, welcome to the Metastock Market Recap. Thanks for coming. Steve, I often talk about as somebody I very, very much like. He does a lot of work with candlesticks. You can find him at stephenbigalow.com. Steve, how long has it been? A decade or two?
At least a decade, yep. It's been 2 decades since I started our website. So
yeah,
I know you all have been around for a good portion of that.
I remember we spent about a couple years working on like your candlestick patterns, getting those ready for Metastock. Little did I know how often I'd run your Doji best friend scan after that. So
Okay,
I tell people all the time, Steve's had a huge impact on my trading. He's been a great partner of Metastock. And we absolutely love you, Steve. Thanks for all the work you've done. And you should check him out. He runs a chat. Tell us a little bit about the forum. Just give us a little bit of a pitch for it.
I've got 2 different chat rooms. Usually we got a couple hundred people in the main chat room, but it's basically I used for information from the website and teaching people how to use candlesticks, just the logic that's built into candlestick analysis, which obviously each candlestick signal tells us something, or the Japanese rice traders wouldn't have shown it to us hundreds of years ago. So we've got the main chat room where people are just discussing good patterns, and people that are new to the chat room can learn a lot faster, a lot more expeditiously of what the different signals are telling us. Then we've got an options room where we can apply that same information, but put the correct strategies that we want to use for the option trading. So I always tell people I put out 2 or 3 stock picks a day in a video format, not so that people have picks, but that they can see what the logic was for. And so it's a continuing education process to see why we're going into different positions. And the basic underlying factor about candlesticks is because the signals and patterns have been scrutinized or utilized by the Japanese rice traders over the last 400 years, it's essentially every trade we put on using the different techniques or the different indicators is essentially putting us in the, or with high probabilities, putting us in the right direction at the right time. It allows us to analyze what's going on in investor sentiment. And the underlying factor should be that prices do not move based upon fundamentals. prices move based upon the perception of fundamentals. And that's all candlestick charts are, is the graphic depiction of what's going on in investor sentiment. So I see you've pulled up the Dow chart.
I have. I figured we'd start looking at some charts. Before we do, though, really, I just want to kind of get where you might know this. We just started a brand new year. Are you relatively optimistic about this year?
I don't have to be. And that's the one question that everybody should just kind of shy away from. We have no earthly idea what's going to happen this year. But the charts tell us what's happening right now. So I'm not trying to invest because I think at the end of this year we're going to be up big or we're going to be down big. I'm investing more as a swing trader, telling me that probably over the next 2 to 3 weeks, the market is going to be doing or moving in a specific direction, or a specific stock or sector is moving in a specific direction. So I hate to be have somebody ask me for a session like this, which way do you think the market's going? I have no idea. Now, when you take the chart that we're looking at right now, we can make make a much better assessment. Let's see. Whoops.
Yeah.
Where yesterday you can see the bearish candle. That's called a bearish left-right combo, which is a bearish engulfing signal following a doji. Well, you can see the last 5, 6 trading days were all indecisive trading days, doji type days. And the stochastics were up in the overbought area, telling us we're at the high end of the range. Well, very simple logic. The Japanese rice traders say when you see indecision going on, that's usually a indication there's going to be a reversal in investor sentiment. So yesterday, when it finally closed back below the previous day's candle or the previous day's doji, that was a pretty good indication they weren't going up anymore. Start taking some profits and get ready to either get back to cash and or add some short positions to the portfolio. Now, there's another high probability statistic involved with candlestick analysis, and that is very simple, that if you see a candlestick buy signal in the oversold area, the Japanese rice traders say you're probably going to be in an uptrend. But you can see the T line, which is the black line that's running right there through the prices. That's the 8 exponential moving average. Very simple concept. If you see a candlestick buy signal and a close above the T line, the probabilities now become extremely strong that you're going to be heading in an uptrend. And as we saw yesterday and today, the same is if you see a candlestick sell signal and a close below the T line, the probabilities become extremely strong that bearish sentiment is now in control. You're going to be in a downtrend. So I always use a simple statement that says, if you know that candlestick signals are the graphic depiction of human nature, and the T line is kind of a Fibonacci characteristic, it's the natural support and resistance level of human nature. When you combine those two, you've got an extremely powerful, high probability trading system. Okay. Now I forgot what the question was.
Oh, well, I think we started a while back with what you felt about this year.
Oh, okay. So, all right. So that was a long, nebulous answer to say, I have no idea.
Yeah. I was hoping you'd say it's going to be better. Like Corona's going to go away. We're going to be able to come out of our basements. That's what I was listening for.
Yep. I have no idea. All I do is what the Japanese rice traders always professed. Let the market tell us what the market is doing. Trying to project what it's going to do or where we're heading this year, have no idea.
Now, I know Steve, somebody's trying to contact you about your auto warranty.
That's right. At least 4 times a day. Okay.
And so I don't know if you have specific symbols that you want to look at today, Steve. I know you've had some interest in, I know we're going to do a webinar coming up about plug and different
Yes.
Tesla.
Yeah, we're starting a new service, again, using the Candlestick Signals. We call it RARE, RARE, which is research analysis, reverse engineering. So instead of trying to project, now, obviously the electric vehicle industry not only has already exploded, but probably has a huge portion of the market that it can get into over the next couple of years. So the assumption will be that the electric vehicle industry is probably a very good area to be in. However, there is 47 that we've identified so far, companies that are related to electric vehicles, whether they make the cars, the engines, the batteries, the parts to go in it. And if we don't have a research department, as we're all sitting out here at our own desks, the best way to find out what's happening is using candlestick charts or candlestick signals to say, oops, they're all of a sudden buying XYZ. Now let's reverse engineer. Let's go back and see what if they've made an announcement or they've announced something that might put their technology or their system that they're working on ahead of the competition. Now, this is because we're looking at technology that is growing so fast that 2 years ago, when Elon Musk said that he has cars that can go 120 miles on a charge, we're all thinking, well, shoot, that sometimes just barely gets you to work and home again. That's not real good. Now, they're up to 420. And then NIO, the Chinese electric car manufacturer, said they're going to 620 with their batteries. So the process of the industry is whose technology is becoming the the forefront, and what does that do to other sectors? Blink, for example, has charging stations all over the world right now. They've been doing extremely well. They've gone from like 50 cents to $45 over the last year. But what would happen if the next announcement says the batteries that somebody's developing can take you 1,000 miles without a charge? Well, that starts making the charging stations a little bit less relevant, that they might not be a place where you go charge your battery. They may only be places where if you happen to be out driving around and didn't charge your battery, you pull in there for emergency charging. So the dynamics of this fast-growing industry is something that is much better assessed by seeing whose technology is advancing and how that's affecting other sectors. So we're trying to find the best trades in an industry. Candlestick charts point that out as far as who's getting the strongest demand for their stock at any given time. Is that Blink right now?
This is Blink, yes. Mm-hmm.
Okay. So you can see where that's gone from. I think it started off, we started buying at $8. You can see the fry pan bottom there, right about where your arrow is. And then once it broke out through there, say we were buying at the $8 range, and over the last number of months, I guess only 6 months, it's gone from 8 up to the $45 range. So basically it boils down to that the candlestick charts reveal patterns and signals that have worked effectively for hundreds of years. I always illustrate that the Japanese rice traders did not become wealthy using candlestick signals. They became legendarily wealthy. They were the powerhouse in Japan, and they were trading the most boringest basic commodity in the world, rice. And they were making, literal fortunes. And it's coming off of one basis, which was human nature. prices don't move based upon fundamentals. Prices move based upon the perception of fundamentals. And the candlestick charts just graphically reveal what's going on in investor sentiment. So that sector, so that's what our new product is that will probably help figure out how we can incorporate that into the Metastock charts, is reverse engineering. When we see a strong chart in that sector, we go back and we analyze what their technology is doing for them, as well as what it might be doing affecting other stocks that had been acting well prior to this point.
In this sector, while we're in it, is there any particular ones that you think have a good opportunity right now?
We have been buying, or we've been holding lithium, LTHM.
Okay. Oh, let's see. Oh, let's look. LTHM.
LTHM.
And is it called lithium?
It's Livent.
Oh, okay. Okay, I got it. That's right. Okay. I was looking for lithium, something called lithium. So
I call it lithium because of the letters.
Yeah. That's an easy way to remember it.
Right. So you can see what the strategy at this point is. How long do we hold a stock that's up this big? Very simple rule. You stay long as it doesn't close below the T line. Another one is LAC. They're a lithium mining company. So
here we go. We'll look at it real quick. And the T line, just for anybody that's watching that needs a little reminder, it's just the 8 exponential moving average. It's called the T line, and we've talked about why it's called the T line before, but
very simple. We couldn't figure out a name for it, so
right.
the trigger line or the trade line, and so we couldn't figure out what to call it, so we just called it the T line. So, and there's a very simple strategy that if you go by the basic rule that if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line, with the caveat that the further away you move from the T line, look back at around, about November or October 1st. Look how far away you move from the T line, and your stochastics in the overbought condition, and you see a doji that when it opened lower the next day, we were taking profits immediately because of the doji rule. The doji rule is very simple. The price will usually move in the direction of how they open it after a doji, because that's showing indecision, and then it tells you the next day what the decision is. And so we take profits up there, because what's our first logical target? At least back to the T line. So right now, you can see that it's up in the overbought area and selling a little bit. Tuesday, if this opens lower, we'll take some profits. Doesn't mean we'll stay out of the trade. We'll watch to see what happens when it comes back to the T line and see if it does another buy signal using the T line as support. So this is what puts us at a great advantage of seeing which stocks or which parts of which sectors in this whole electric vehicle market is getting this, the greatest strength, because you could be sitting in some. If you look at Solo, SOLO, it's a Canadian electric vehicle manufacturer, but you can see what it's doing right now.
Does this look right?
No.
Oh, let's try again. There's a few options. So SOLO.
SOLO, you're right. And what I'll be illustrating is that chart, Solo, will be it's moving fairly flat. Well, obviously we don't want to have our money sitting there. We're trying to find the ones that have the best upside potentials. Now you can see on that chart also, look what happened a couple months ago when it spiked up way up above the T line. Well, that's your alert. When you're that far away from the T line, we have a simple rule. It's going to come back and test the T line. But notice it didn't do a sell signal until the next day. That would have been a lot of profitability that you've given up. So we've got a very simple method. If you're up there at the top and you're that far away from the T line, now we flip to the 10-minute chart. And when the 10-minute chart starts selling off below the T line, then we take profits. So we're usually coming out almost like 90% up to the top of that trade, because our alert was, look how far away you are from the T line. Let's get ready for candlestick sell signals.
Okay.
So I was just picking out solo because it's been moving sideways for the last couple months. Well, obviously that's not where you want your money. You want your money in the stocks that are coming up with innovations. Now, I think NIO, again, coming out of one of the Chinese electric car makers, they just announced within the last few days that their batteries will now take you 625 miles versus, I guess, the Model S in Tesla's cars are at 420. Now, I only know these statistics not because I'm researching the car manufacturers to see who's the best. I'm finding the ones that are showing strength or showing a strong buy signal. Then I'm going and researching that specific company to see why it's all of a sudden being bought, that it might have technology that's overriding previous companies. So when the announcement came out a couple of days ago that NIO had batteries that were 625, I found out that Tesla's cars were at 420. So it's not that I'm any great researcher. This is what we call reverse engineering. We go back and find out why their technology and whose technology they're outdoing at that point.
All right. Do you have can we take a look at the Tesla chart for a second?
Certainly.
Okay. Let's go ahead and pull it up real quick. And just to kind of go through the averages that we use, or that you use, we've got the 3 exponential moving average here.
Right.
That's called, you call that the 3 T line.
Yep.
You got the 8 exponential moving average, which is the T line.
Correct.
We've got the 20 period simple moving average, the 50, and the 200. And you use, I'll go ahead and talk for you for a second, but you use these more to kind of, you look at these, and the way you say that you look at these is because that's what everybody else is looking at. And so you look at that to see where support and resistance might be.
Right. We're not using, a lot of people say, well, why don't you use instead of using the simple 200 and the 50, why don't you use the exponential? Isn't that a little bit better? And the answer is we're not using those indicators or those levels to make our decisions. We're using those levels because every major money manager around the world uses those 2 moving averages to make their decisions about their portfolio. What we're doing is seeing what the graphics are of candlesticks that tell us what their decisions were at those levels. So the T line is nothing proprietary, but through the years, and I've probably been using it now for 15 years, it's just very simple logic, and the statistics just kind of bear themselves out that if you're above the T line, you stay long until you see a sell signal and a close below the T line. You can see a sell signal, but if it doesn't close below the T line, you stay long. If you see a close below the T line without a sell signal, simple strategy. The next day, better trade back up above the T line. If it trades lower, close it out and wait for it to come back up above the T line. So I tell people I used to be the worst investor in the world. I was a stockbroker for 8 years, and I got out of the business because I realized the brokerage firms had no more idea about what made prices go up or down than anybody else. When candlesticks came along, the logic was these were graphics telling you exactly what's going on in investor sentiment of the buying and selling strength. So I made good, when I say I made good money, I wasn't a consistent contributor like I was when I was the worst investor in the world using candlesticks. Then when we added the T-line, my profitability expanded tremendously because I wasn't getting whipsawed out of positions that had a sell signal, but then didn't confirm closing below the T-line. So as you can see, I might have closed this trade out about a month ago, where you saw a dark candle, couple of dark candles. I might have closed out there, but as you can see in both cases, they didn't close below the T-line. That would have held me in that position.
Is this where you're thinking about?
Yeah, there and just to the right of that next
Right.
dark candle. Yeah, another bearish engulfing signal. But they didn't confirm. So anytime I see a sell signal like we're seeing right now, you're seeing some selling, but it hasn't closed below the T-line. So the strategy remains very simple. Tuesday, they better open this positive and start trading positive. If they start trading lower, that would be a good time to start taking profits.
Perfect. Any other stocks in this category? We have some requests for stocks if you're ready for that.
Bring them on.
All right. So let's see. Rich asks for pins, goose, gold and silver. So we'll go ahead and start with pins. We have actually since we have a couple of requests for gold, let's start there. I'm just going to pull up, I think, the gold ETF GLD, unless you prefer the futures contract.
Pull up whatever you want to.
Okay.
Because they're all going to be telling you what's going on in investor sentiment. So you can see about 2-3 weeks ago, you had that doji at the top, and they gapped it down. It looks like they gapped it down and traded it up. But when they started trading back below the T-line after that sell signal, very simple rule. You stay short until you see a buy signal. Now, we're going to be doing a full day training tomorrow for our members that show you all the indications of when it's time to take profits. And one of them is very simple. Again, that gap down below the T-line. And now all you have to do is stay short, but you become a little bit more attentive because look where your stochastics are. It's showing down here that you're in the oversold area. So you might be a little bit more attentive to where some buying might come in, that if you were short, that would be a little bit better indication of start covering your short positions. But right now, there's nothing to tell you that the buyers have stepped in yet. So if I was short that gold, if I was short this position, I just put a safety stop at today's open, which is right there at the 200. Because logic says if you're in the oversold area and they have enough strength to come back up through the open of today, that's probably the area that they're using as support. It's the 200-day moving average.
All right. Let's take a look at pins. Which this will be interesting. I'm not sure what this is.
What's the? I can't read it.
This looks like it's going to be Pinterest.
Oh, pin interest. Yep.
Yeah.
Well, you can see. I forget what's your dark candles. That black candle, is that a?
This one right here.
Yeah.
I think that one is signifying that it's a bullish engulfing. This darker color one. I'd have to look, and I can check. I've turned off kind of like I've got your expert attached, but I've turned off all of the annotations just so we could focus on the chart right now. Yeah. But let me just look real quick, and it could be a number of things that looks like a left-right bullish, or it's just indicating that this is a pattern that we're seeing. If I turned on the symbols, it would tell us. So let me do that real quick.
All right, but I can make the analysis very quickly. Wherever they're selling, what's it say? Oh, the dark cloud. All right.
Dark cloud. Mm-hmm.
Which meant it opened higher and closed more than halfway down the previous candle. That's one of the 12 major signals that we have identified 6 longs and 6 shorts. But that's a sell signal. Now, if you take all the text off, if you could, Jeff.
Absolutely. Let me give me just a second. And the text is gone.
Okay,
Magic.
so what you can start assessing with much more clarity is your stochastics came up toward the overbought area. Over the last few days, it's turned down. And it did it after a dark cloud, number 1. And then today it closed below the T line, number 2. That means you definitely should be out of that position. And number 3, if you draw a line straight east of the dark cloud, you can see the evening star signal. So you had a evening star signal, which is one of the 12 major signals, a sell signal, go back up to that same level and have another sell signal. That's pretty obvious that that's where the sellers are taking control. Today, if I had been long, I would have closed out the position. Now you just watch to see what the next target is. If you're going short, to see whether the 50-day moving average is the next target. If it can't hold there, now you start looking for gaps or other moving averages that everybody else would be watching below that level.
All right. And let's take a little bit of a look for Goose.
Goose, all right.
I'm going to assume that it's this one.
It's GOOS.
Mm-hmm.
That one, you could see where the buying started, a morning star signal about 2 weeks ago, right there at the very bottom. Today, it looks like it did a bearish harami in the overbought area. Now, a bearish harami tells you the buying probably has stopped. Also, you've got other things to look at. First of all, notice yesterday they came up through the resistance level of the 50-day moving average. And normal human nature is when they break through a resistance level, they're likely to come back to test it to see if it's going to act as support. So if this opened lower, if I was long and this opened lower on Tuesday, I'd take profits, but then I'd just wait to see what it does at the 50-day moving average. If it supports at the 50-day moving average, meaning if we see a candlestick buy signal forming at that level, that's when you can go back in with great confidence because you're actually visually seeing that that's where the bulls are stepping back in. They wanted to see if it was going to act as support at the 50, and that becomes a very high probability trade setup to start going long again. Now, notice at the peak at about a month ago.
Right here.
Yep, that's what we call a bearish flutter kicker signal. Notice it opened and then closed up there at the top. Then notice the next day, they gapped down below the previous day's open and did a doji. Now remember our doji rule. The price will usually move in the direction of how they open after a doji. So when they opened it lower, that was creating what we call a bearish flutter kicker signal, because a bearish kicker signal is one of your strongest signals. And if you took out that little doji, the little flutter, you essentially have a bearish kicker signal, which indicated there's going to be a very strong downside movement. So this is why you don't need to know fundamentals. You don't need to know a bunch of technical information. If you know what the candlestick signals are telling you, you've got a much more clear indication of what's happening with human nature and which way a price is likely to move.
All right.
All right. What else you got?
Let's look at play. All right, here we go. Dave and Buster's. PLAY.
All right. So you can see that about 2 weeks ago, you had a big dark candle, you would have closed out the trade. Then you saw the bullish harami that told you they weren't selling it off. You could always buy it back when it came back up above the T line. Right now, notice what it did today. Now, here is the most compelling factor of the T line. Look how many times it has come back and used the T line as support. That's relevant because nobody has the T line on their charts. So it's not like everybody's watching to see what it did at the 50-day moving average. They're not watching to see what it's doing at the T line because nobody has the T line on their chart. So that's more evidence that the T line acts like a natural support and resistance level of human nature. So the simple rule on Dave & Buster's right now is it looks like it almost came back down. I can't see it well enough, but it looks like it came down and used the T line today as support and bounced back up. That's a little bit more confidence or evidence that that's where the natural support level is. And all you can do right now is stay long on Dave & Buster's as long as you don't see a sell signal and a close below the T line. So what we do in a case like this, over the last couple of days, you've had a doji, and now kind of a, I want to say, hanging man. So if I was long Dave & Buster's on Tuesday, I just put a safety stop below today's low or below the T line, because logic says if it comes back through that level, those indecisive signals are now showing that it's time to be closing out that position.
All right. One more. Let's look at RCL.
Royal Caribbean.
This is Greg's favorite stock.
Whose favorite?
Gregory's.
Oh,
we had a running joke for the longest time. We'd look at RCL every time. So this is for you, Greg.
All right. And so this is what I call a nothing chart. There is nothing on this chart that tells me I want to be long or short.
Okay.
So I would say if you're in it and you didn't close it out today, the reason we call it a nothing chart is there's no direction, there's no signals, there's 9,500 trading entities in the trading world. The answer to this is, why be in something that you can't analyze which way it's going when you can go find a chart that looks like the last bottom there about a month and a half ago, when you can go find a buy signal and have much better probabilities that you know which direction it's going to move from that point.
If somebody wants to, you might not be ready to do this. Kind of apologize for putting you on the spot, but you mentioned that you're doing a bit of a class tomorrow, and can people find out about that at StephenBigalow.com?
Yeah. I don't know how I could. Oh, I can. Can you? If I put it. Oh, pshaw! I just lost it. If I put a link in the chat room. Again, this is a full day training. I tell people you don't even have to get out of your pajamas. You just come and let's see. How do I put a?
Are you going to put it in the GoToWebinar chat room?
Yeah. No,
okay. I think Greg can paste that into YouTube for us, so that will work. Okay. Yeah, and I see it. So, Greg, if you would do that, please.
So I tell people, you get up, get your cup of coffee. You don't have to get out of your pajamas. We will go probably about 5 hours on all the identification indicators that show us when it's logically telling us the probabilities have changed. So I tell people you can stay in your pajamas. It's like which Marx Brothers, Groucho said, today I went out and shot an elephant in my pajamas. How the heck he got into my pajamas, I have no idea. So, but everything built into candlestick charts is pure common sense. When I was learning candlesticks, I can't imagine, 40 years ago now, everything I learned in candlesticks, the thing that kept whacking me in the side of the head was, I could say, yeah, that makes sense. I already knew that. It's just I've never seen it, or now it becomes much more clear when I see it in a graphic depiction. So there is nothing magical about candlesticks. It's just telling us what's happening in investor sentiment, which is the most consistent indicator in the world. It's worked 400 years ago. It's going to work 400 years from now. All we have to do is learn how to use it correctly.
Very cool. One other question that we had that I think I'll take a lead. I promise to answer this one, but Alpha Diallo, something like that, wants to know how the scan works in Metastock. So I think I'll spend just a few minutes talking about how easy it is to scan.
Okay.
And I may seem a little bit prepared to talk about this, but it wasn't planning on talking about this. But let me kind of go in here, just because we talk about it all the time. I just grabbed the first PowerPoint that we have for Steve, and it happens to be in here. So we did a project with Steve. I remember we talked to him all summer. He did all these interviews with William, and we put together a bunch of his patterns. Like, here's a big old list of the patterns. You've got like fry pan, you've got the belt hold, you've got doubling tops, you've got his doji at the top, his doji best friend. All these are patterns that we coded into Metastock as things that you could identify on the chart. Like, we put them on the chart just a minute ago. And because we identify them on a chart, let me just go back here to Metastock. If I turn them on, I can actually display them. So let me go ahead and put the text back on here, and you can kind of see what they look like on the chart. Expert properties, I'll just turn them all on and click on OK. So it's identifying, engulfing bearish, engulfing bullish, a lot of the patterns, but a lot of here's a bull kicker pattern, a fry pan at the bottom. These are being identified automatically. And because we're identifying, there's also, I'm going to actually show this too. There's also one of my favorite features of Metastock is there's a bit of a commentary which will just tell you like what these patterns mean. So if I highlight the bearish engulfing, it's going to give me a bit of a definition of what that is. So we've got all of that built in. There's about 30 patterns because we've created the math for them. We can also scan for them. So if I come into the Power Console, we call it a Power Console in Metastock, and I come to our Explorer, which is the name of our scanner, I can go in and say, okay, well, let's go ahead and find a scan. I'm going to go ahead and scan for, and they show up in the software as chart pattern, candle profit systems. See, I'm not actually ready to talk about this. But if I highlight over these, it'll tell you what you're scanning for. And one of the ones I love to scan for is the doji best friend. And it's just a doji, which is, Steve likes to call that a sign of indecision followed by a decision, a doji followed by a gap up, meaning they had some indecisive, the bulls came in and they're going to start to move that up. And that's one of my favorite patterns. So if I want to find that on a list, I just highlight this doji bot dynamite. And all I have to do, I'll just do a local data list real quick. I'm going to do the S&P 500. I'm going to go ahead and start a scan. And it's going to run through, and you can see that it is just chonking through those numbers. So it's gone through, it's rejected around 99% of the S&P 500. And what I'm going to get back from that is just a list of the stocks that have either a doji at the top, which is a doji, followed by a gap down, the doji best friend, left, right bullish, left, right bearish. And there wasn't any doji best friends in this particular, in the S&P 500 on this scan. Or if there was, we'd have a 1 right here. But you can see there is a left-right bearish pattern on ExxonMobil and on Ralph Lauren, and so I could open those up and take a look at them. But to answer your question, that's how the scanning works, Alpha. It's very, very easy to use, runs really fast. One of the things that I love the work we did with Steve. Steve was really, really thorough in talking to William and making sure everything gets back. But the fact that I just went through 500 stocks before I could kind of explain it, and I'm looking at 3 now because those are the ones that have the opportunity. Great tool. There's 4,500 stocks out. Well, there's 4,500 optionable stocks out there, right? How can you sift through that? So that's a brief demo. Certainly wasn't going to do a full demo. If you're interested in that, you can get a hold of us at metastock.com/sales-chat. We can send you a more in detail video. We can set it up for you. We can kind of help you get everything going if you're interested in it. But it is a product that's been one of our best sellers. It's one I'm personally proud of, and Steve, you did a great job in helping us put it together. That's all I have.
All right.
I think we can go ahead.
Take a look at another stock. This is darn, I forget the name of it. Bingo. BNGO.
Okay.
This is what narrows your trading down to the best trade setups. If you could make that chart.
Whoa.
Yeah, so there you go. So you can see where it broke out about, you're right in there. And then it did the consolidation right back to the T line. Well, we started buying yesterday because it was doing what we call a J-hook pattern off the T line. And then today, with the market down, you can see what it did again. So we know what the projection of this price is likely to be. That first wave of the J-hook was approximately 7 points over here to the left before they consolidated.
Mm-hmm. Right here.
So that was about 7.5 points. Now, the J-hook pattern has a very simple math to it. From there up another 7.5 points would be wave 3 of the J-hook pattern, which probably takes you now into about the $15 range. So not only does human nature work the same way time after time, it creates patterns where we can kind of calculate what the next price move will be. So even if we miss that first move and we see a J-hook pattern setting up, it just acts as kind of an alert to say that strong investor sentiment after consolidation is now probably going to go back into that strong investor sentiment again and produce another wave equal to the first one. So if that second or that first wave was 4%, yeah, that might not even be worth putting your money in. But if you can find one where the next wave might be 100% price move, essentially what you're doing is you're identifying the areas to have your money that's going to produce the highest probable or the highest profits in when you put your money at risk. So
Black Hole in the comments says he bought Bingo today at 7.85. So cool.
Okay, good. So this is what made me go from being the worst investor in the world, contributing every month to the markets, to now where I just extract money from the markets every month, because every time we do a candlestick trade, we know the probabilities are in our favor. We know when it's time to get in. We know when a trade's not working to get right back out. That old adage of cut your losses short and let your profits run. I always illustrate the fact that in the 40 years that I've been doing this, I've listened to every money manager say, cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Candlesticks make it very simple. If that was a candlestick breakout and we bought on positive trading and it closed back below the T line today, we'd have closed it right out. That was a bad trade. Right now, we're going to continue to hold this trade as long as it stays above the T line, with the expectation that we're now probably heading much higher. So this, I tell people, is not rocket science. This is just merely learning what the Japanese race traders have illustrated to us for hundreds of years, what happens in human nature.
Blackhole says it has very strong fundamentals and has good news too.
Yep.
So
and so
that's showing up on the chart.
Yep, that becomes the reverse engineering. That's where you go backwards and say, all right, they're buying this. What is it? What does it do? And that's our new rare trade, research analysis, reverse engineering. Why is the strong charts acting strong? And so we've now got a little bit more background of, because there's a lot of, I made a lot of money in the electronic vehicle stocks and the lithium stocks. When I was first getting into them, I had no idea what they did. I knew what the symbol was and I was buying the symbol. But then we started going back and saying, all right, this one's in a sector that's going to continue for a while. So it also helps people do short-term trading as well as establishing long-term positions.
Okay. Steve, I think we'll call it around here.
Okay.
I do want to say thanks for coming. I always love having you in here. Thank you for everything you've done for Metastock over the years and for my own trading. I appreciate it. So if you guys want to check out Stephen Bigalow, go to stephenbigalow.com. That's with a PH. Steve, have a good weekend. Enjoy the training tomorrow, and I'll talk to you soon.
All right. Thank you, Jeff. Thank you, everybody. Have a good weekend.
For everybody else, thanks for coming. I hope you enjoyed it as well. Hope you picked up a few good tips, and I hope we see you at the next one. So, goodbye.
See ya.